Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, February 26th. And with no surprise at all, the market might as well close the last time frame of the week with a bang, as this week was pretty interesting overall. Market with no firm direction, although I do think sellers are in control. The way the buyers failed, we almost trade. We had over a $7 range on a day. M's range was almost $5. We almost traded. We almost traded all of the day's range, and it's not a small range. We end up, believe it or not, with a range that size, 10 wide. My line of stand is still those 2 week lows, the 2 weekly lows, 387.50. We tested below the 50-day moving average for the first time since I think January 29th. Last time we did that, we got above it, didn't see it again until we made all-time highs. But the way we closed, we're literally, I think the ES might even be below theirs. We closed right above ours in SPY or right below it. They haven't even really put a firm closing price in here yet in SPY. So regardless, it's right around there. Now, one day doesn't make a market, but anything the buyers attempted all week, and believe me, they attempted all week. Gave it up. Gave it all up. I had a horrible day for the second month in a row. Last month I gave back half my month. Today I gave back 95% of February. At one point it was February and part of January. So I took very few trades. The trade I lost on, I'm not upset at the trade I took. It wasn't a poor trade. It was, in this kind of volatility, too big a trade, especially with the add-ons. So it's not the trade itself, but we'll go over that in a minute. We'll go over all the charts, everything. So let's start. Let's go to the Russell. We all had, at one point it looked like J period was going to be an afternoon pullback low in all three of these indices. Well, that went out the window for the most part. Although I'm looking right now, it doesn't look like M took out J's low in the Russell. So you can use that as an afternoon pullback low if you want. I'll go over the charts in a minute after we go over everything. For now, on the smaller picture, again, you can call the daily in the Russell either down, one-time framing down, or you can call it balance to down. It's a 4-day balance. They stretch their balance. Again, that's very subjective. We'll look at the charts, though, in a little while. Triple Qs, we all basically did the same thing. We gave up the afternoon pullbacks. Triple Qs actually ended 10 or 11 wide, I believe. We ended 10 wide also. In their balance, now, they didn't even take out, I don't think, Tuesday's low. If they did, it was barely. We took ours out by almost $2. That's why I'm calling my daily down. But in the triple Qs, you can certainly call it still balanced, even though they're one-time framing down 2 days. Now, they barely took out yesterday's low, but they did take it out. But you can still call it balanced if you'd like. All right, let's go to SPY ES and what happened here. So, again, after giving up the ship yesterday and closing towards the lows, here's all the pre-market. Ton of volume being done in here, ton. So the market was still short. So when we opened, I said I wouldn't be surprised if you get some short covering. So instead, we opened and pushed right back down, right back into M's range and pushed down, which kind of surprised me. So I actually took a long in A period, which turned out to be good. I didn't hold it long against this. We were, I think, 12 wide here for the pre-market pop. I was like, maybe it'll have a little speed bump. I took a long. It did go back up. Certainly didn't stay married to it, and that worked out. Let me tell you, any trades today, I know you're looking for destinations and reference points, but with these $2, $3 time frames, I would not be staying married to them, especially if you're playing with any kind of size. Now, B period. And here's where the trouble started for me. So B rips below A's low. I didn't get on board right away. Actually, the trade, was it in B? Yeah, it was in B. Ripped lower. We got below the 50-day moving average. We got into that gap from February 2nd. It was over 200 ticks, at least 89. Now, I didn't short it down here because I told the room, I said, I expect to bounce the first time, possibly off the 50-day moving average. Now we got below it by $1.50, $1.70 in SPY. Got below it pretty good. So when we got back and got above it, that's when I took the short play. So we got above the 50-day moving average by about 50 cents. Started with a 30 put play. Then I added. I'm like, well, maybe we'll reject against yesterday's low. And this is where the problem was. It was just too big. I added 70 at M's low. Then we went up, and I said, all right. Then C started. I'm like, if C fills single prints, a lot of times they'll do that and defend the one-time framing down. Well, I added 150 more. So I had 250 puts of the, I didn't even write down the price. I forgot which ones they are. I forgot what one, I'm not even sure which ones they were. They were probably either the 382 or the 383s against filling the single prints. And obviously it just sat there, and then boom, took out B's high. And by the time I got out, that was it. So right off the bat, mental reserve, everything else out the window. We continued to one-time frame up inside the initial balance. We took out, by the way, both the initial balance. No, I'm sorry. We took out both the overnight high and low. We only took out the IB's high. We grinded up, rip above the high finally, and get crickets. I did say if we ripped higher initially in F and tested that very visual level for me, I would have looked at a put play again up here. Never got there. G was an inside bar. Now again, I was still calling the market pretty well. I said there's a battle at the opening. We're one-time framing up. I said these buyers, right? So when we took out B's high, what happened? Shorts covered, like I did, and then you get the FOMO buying. I said if we take out G's low, guess what? They can all give it up. And that's what happened. H took out G's low. Now again, I'm in 10-tick increments, I think. Yeah, so it doesn't look that big. That's a pretty sizable push down. Actually, it was, I'll tell you right now, it was almost 80 cents. So that would have been a really nice entry point on a short. Didn't do it. Again, why? Because I was kind of hesitating and looking for the quote-unquote perfect entry. Well, I got what I thought was a really good entry in J. We flushed out really hard. I told the room, now remember, at the time, POC was raised from A's low all the way up for SPY to F's low and C's high. So I said, if we get down to around half back at the time and or value low at the time, I'm going to get long. Well, I did. I got long 250 calls. And it worked. I basically got him at the low at the time in J, and it traded all the way back up, and I took him off, took the last bunch off right at J's high. We never got to C and F. And then J came back down, and we actually lowered out POC. I was like, wow, after 3 time frames? So, but then what happened? That's it. They held. J ended up holding. I was actually tempted to get long again in K. It didn't get down low enough against J's low. It went back up. We ended up raising POC again. M was M. I was kind of tempted to take a short on the reversal bar to see, and use the day's high as my out. I'm like, are we really going to probe? But I just stayed away from it. I was like, I got back half my loss from that short in B and C. I said, that's it. I want to go home green for the month, and I will start fresh on Monday. Again, very, very difficult week all the way around. If you made money, great job. If you didn't, get back up on it Monday, because again, it was not an easy week to trade. Although I'm sure on Twitter, everybody's going to tell you how many millions of dollars they made. Okay, destinations for Monday, which will be the new month. 382.67, 10 wide, H is low. Then 385.58, today's high. Then 386.67, afternoon rally high from the 25th. And then you should have the single prints. I'll give you the one set because that's really my line in the sand still. 386.90, get filled at 387.56 from the 25th. That's C's low. That's still my line in the sand. I said it. I said even if we had ripped up there today, I would have taken a pretty good put play to see if we did not get back into the 2 previous weeks' lows. In fact, I was looking for that in A period. In fact, instead, A went the other way. So, but that's still my line in the sand. For the downside, we have today's low of 378.23, which is now a weekly low, and then filling the gap at 377.34, 89-point gap from February 2nd. Then we have, I gave these to you yesterday, 375.81, the pullback low from the 1st of February, and then the two sets of single prints, which you should have, and the monthly low is 371.42. Right now the monthly is still healthy, one time framing up, okay? But remains to be seen how that plays out. Now, let's go to the charts. And I'm going to go over all of them, so just bear with me. Okay, I'm going to start with IWM. I think it's easy to do that, and then we'll do the SPY last. So let's go to the monthly and the Russell. So the Russell right now is, oh, I did not mean to do that. The Russell right now, look at the monthly. Yeah, we came off a bit. Not a bit, we came off a lot. But it's still one-time framing up for 5 months. So the monthly's still healthy. Okay, until we take out this month's low, which is 205.76, it's still healthy for now. Okay? Weekly. Now the weekly, obviously, a little different story. One time framing down for 2 weeks, right? So we went balance, bull, balance, and now it's down. One time framing down for 2 weeks, firmly inside this balance. Now, last week's low, if this is correct, is 219.39. And they have us closing at 218.31. So the way my line in the sand and SPY are the 2 previous week's lows, well, they just closed below last week's low, and they're firmly inside of here. So for me, the first step that IWM buyers have to do is getting back inside last week's range. If not, and they start continuing lower towards this week's low, well, then guess what? That 205 area becomes a very visual point. Daily. Stretch the balance a bit, closed inside of it. It is one time. Look, balance is a subjective. So if you call it down, no, you're not wrong. If you call it balance or balance to down, you're not wrong. However you want to look at it. So again, we're all going to look pretty much the same. I'm trying to think how much they took out their low by. 215.56, and today's low was 214.81. So they took out the Tuesday's low by less than $1.80. So if you want to call it balance because it came back in, that is absolutely fine. Let's go to the triple Qs now. Just want to see something real quick, so just bear with me. I want to make sure this is, I have it up right. Okay. Let's go to the triple Qs. Monthly. One time framing up for 4 months, just like the SPY is. Did we come off the highs? Oh, we sure did. But until we take out February's low, we're still one time framing up. Once we take out February's low and all these things, then we're in balance in the monthly. But for now, right, markets don't go bull bear. As vicious as this market was this week, markets don't go bull bear or vice versa. So the monthly is still one time framing up. If we take out this month's low, it goes to balance. Same on the weekly, kind of, right? We were balanced, went bull, balance, bull, took out, we almost had a outside week down last week, and then almost had an outside week up. So that was balance, and now, for me, you came out of it bear. So the weekly is down. Now look what they did. Remember the way we haven't even got, wait till you see the SPY. I didn't realize in the weekly that they got down this low in the triple Qs. So 310.88 is their low. So this previous balance low was 313.12 and 312.76. So they stretched it pretty good, but they did close inside of it. Okay? So I am calling a weekly down, But for now, all they did was stretch this other previous 3-week balance. Remains to be seen how they come out of that. And then on the daily, again, we're one-time framing down for 2 days. They actually, this is definitely balanced because their low is 311. Today's low is 3. We barely took out the 4-day balance low. We took it out by 12 cents and came back in. So this is a 4-day balance. Now let's get to what we're talking about, the ES and the SPY. Let's start from top down, monthly, weekly, daily. So here's the monthly. It's going to be the same picture as the triple Qs. Nothing has changed until we take out this month's low. Okay, and it's not 370.38. That is an incorrect low. The low for the month in SPY, from what I see, is 371.42. Not a big difference, but it's definitely a difference. There was a bad tick that this month. So 371.42. If we take that out, that stops the one-time framing up and would put us inside of a 4-month balance in March if we take it out. But right now, we're one-time framing up. Now, we didn't get any distance away from the previous month, obviously, but we're still one-time framing up. Weekly. I'm calling the weekly down now. We went balance, bull, balance, and came out of balance to the downside. And more importantly, unlike, we never tested these two lows like triple Qs did. We are below the previous 2 weeks' lows. We got back inside of them every day this week, okay, except today. So for my money's worth, that's my line in the sand. If we don't get back inside of those, you will see the bottom of this balance. And the bottom of this balance is around 368.27. So again, I would not be surprised to see the 365, 370 level sooner rather than later if we don't get back in. Plain and simple. That's my line in the sand for the bulls on the weekly. And the daily, again, we stretched our 3-day balance a lot further than IWM did and certainly than triple Qs did. So I will call this, even though we closed back inside of it, I'm giving, the way a lot of times I give the bulls their due, well, I'm going to give the bears their due. I'm going to say we're down in the daily for now. Okay? If we trade inside of the range, if we take out today's high on Monday, when they were firmly, then we're back in a 6-day balance. I'm sorry, 5-day balance, including Monday. No, 6-day balance. But if we don't take out Monday's high and we stay inside, it's still down. And if we take out today's low on Monday, it is certainly down. And then the next real destination, becomes that 368, 370 level. So that's kind of how I see it. 151 million. So think about this. We did 149 million, I believe, yesterday. 151 million with the after hours still to come. So we're going to do probably at least 160 million today. Remember, on all those grinds up, the volume was horrible. Look how they just shake it all out in one shot. This doesn't mean the market's falling out of bed. This doesn't mean, it's all over for the buyers. Let's remember a couple of important things. I'm going to go back real quick to the profile while I'm talking. Let's remember a couple of real important things. The all-time high is poor. The all-time high is in the overnight, right? So the regular trade now is high is poor. The all-time high is a buck and change higher than a regular trade now is high. So there's nothing wrong with a healthy correction. What I'm a little befuddled by, for lack of a better word, was this action this week. I don't have a problem with the market, go straight down. But when you have a trend day down, then a trend day up, then a trend day down, I mean, you talk about lack of confidence either way. It was absolutely stunning this week how this played out. Now, a lot of people are asking me, are there long-term plays inside of this market? Sure there were. I'm sure there were. But we still stopped at very visual areas. We got below the 50-day moving average, but didn't spend any time below it. We kept stopping at very visual areas throughout the week. But was there some long-term money in here selling? I think there was, especially the fact that we're below those 2 weekly lows. They see that. So, we'll see. I mean, they don't care about reference points and destinations, but if they think the market has put in a short-term top, there's no reason for them not to take money off the table. Right? So, we'll see how it all starts playing out on Monday. Again, execution by me today. I'm not sad. I'm mad about the execution. I'm mad about the size. It's pretty painful to make money. I'm going to say probably, I don't know how many trading days there were in February, but if there were 20 trading days, I probably made money 17 of them, and I gave back 95% of my month. That's not good, and it's a lesson learned in my room. We call the market well, so that shouldn't happen. The education part of it is the big reason people are in my room, right? For how I teach them and how I call the market. I certainly don't want anybody piggybacking off me, but even me, with the experience I have to continually learn to cut size on days like today, certainly cut losses when we're running like this, and scale it back, plain and simple. I hope you had a much better day than I did and a great month. Enjoy the weekend, have a great night, and we'll speak prior to the opening on Monday.